Hey people, I welcome you back to Caroline's Online Academy to another video in which we are in the series of videos in which we are solving the previous year question paper and sample question paper questions on the chapter Dissolution of Partnership Firms, and currently we are solving questions that require us to prepare journal entries. I have a question from the year 2020-2021 sample question paper, 4-mark question. Past necessary journal entries in the following case on the dissolution of partnership firm of partners X, Y, A and B. After the assets and liabilities have been transferred to realization account. I forgot to mention that. Okay. So yeah, the first transaction is what, my dear children? Realization expenses of rupees 5,000 were to be borne by X, a partner. However, it was paid by Y. There are two ways of doing this. Now, X is supposed to bear the realization expense, and Y actually paid the realization expense. So it's a deal between X and Y, and therefore we don't have to pass any journal entries in the books of accounts of the firm, or we can record it like this also. How do we record it? The realization expense was borne by whom? The realization expense was borne by X. So X is supposed to pay it. So X's capital account will be debited. Who actually paid it? Y paid it. And therefore Y's capital account to be credited. Because now X has to pay Y. So if X pays the money to the firm, because we have debited him, that money will be paid to Y because we have credited him. So in either cases, realization account and the firm's bank account are not affected. It's a transaction between X and Y. You can also do no entry. That is also correct. Okay. The suggested answers tell you that X capital to Y capital as a journal entry, but if no entry is also correct. Understood or not, my dear children? Okay. Second one, investment costing 25,000, comprising 1,000 shares, had been written off from the books completely. These shares were valued at 20 rupees each and were divided amongst the partners. Okay. So their partners have divided amongst themselves shares valued 1,000 shares valued at 20 rupees each. That is what is relevant for us. What it was valued at earlier doesn't matter to us. Understood or not, my dear children? It cost 25,000 rupees, but that is not relevant to us anymore. How much is it realizing now? That is relevant to us. These shares are valued at 20 rupees each now. So 1,000 shares into 20 is 20,000. That is the value of the investment that we have now. And it has been divided amongst the partners. Amongst who all? X, Y, A and B. So X's capital account debit. Sorry. X's capital account debit. Y's capital account debit. A's capital account debit and B's capital account debit. So X, Y, A and B. These people are taking over the investment. Whenever an asset is realized, realization account will be credited. Am I right or not, my dear children? So to realization account, what is the value of the asset that was realized? An investment of 20,000. So 20,000. It's being taken over by the partners X, Y, A and B. And the asset is sold for cash. Bank account debit to realization account is a journal entry. But when the asset is realized by partners, taken over by partners, and it will be set off against their capital account. So it will be X's capital account debit, Y's capital account debit, A's capital account debit, B's capital account debit to realization. The journal entry for partner taking over the asset is partner's capital to realization, and therefore, all the partners are taking it, and therefore X, Y, A, B to realization. All right. Y's loan of 50,000 was settled at 48,000. So what is happening here, my dear children? Y's loan is settled. And Y's loan is what? This is liability. But it's not a third-party liability. It's a partner's loan. It's considered as a third-party liability, but it ranks below all the other third-party liabilities. So it is not, usually when you settle a third-party liability, realization account will be debited. Third-party liabilities are transferred to the credit side of realization account. However, a partner's loan is not transferred to realization account. So when a partner's loan is paid off, the journal entry is partner's loan account debit to bank account. Because bank money is going out of the bank, and Y's loan account is a liability and that is getting settled. So partner's loan of 50,000 was settled at 48,000. For a 50,000 loan, you're only giving 48,000. So what does that mean, children? You're getting a profit of how much? 2,000 rupees. And all profits will be credited to nominal account. The only nominal account that is available during realization is dissolution is realization account. And therefore, you credit realization account with 2,000. Understood or not, my dear children? Got to remember this, please. There's one question, Charu, Dwani, Pavni, ignore, which I had solved earlier. You should also go through that question because it's also, kind of same thing. Machinery book value of 6 lakh was given to a creditor at a discount of 20%. All right, my dear children. So basically, what is happening here? An asset is taken over by a liability. A creditor is taking over a machinery. What the book value of the machinery is, or in what price it was given, and all is not relevant because they're not saying that it is given as part payment or remaining or settled through cash or nothing like that. Okay, they're just saying that a creditor took over the machine. Understood or not, my dear children? And therefore, all that we have to do is realization to realization, and therefore that would result in no entry being passed in the question. Understood or not, my dear children? With this, we've come to the end of this video. I'll meet you again with another video where we solve where we prepare journal entries for questions from dissolution account. We have 3 more journal entry based questions that I have to show you. That I will do it in 3 more videos. Understood? And then we'll solve all the one-word question, and then you should be good to go with respect to dissolution of partnership firms. If you listen to everything that was taught in the video and understood everything, you should be able to score 8 out of 8. Welcome, children. I wish you luck. You people have fun. Take care. See you again in the next video. Bye-bye.